outbound and inbound, and is especially more acquaintance with the NRI investment opportunities and taxation and processes. And DSP Mutual Fund, out of 80 lakh crore mutual fund industry, manage around 2 lakh 5,000 crores. They are unique. They are specially standalone only through the mutual fund. They are only into finances, and they bring a lot of unique information, unique products to the Indian investors and to the NRIs. And through the Netra, they talk about, like, Mr. Narayana Mati says, we believe in God. The next, we believe in data. And here the DSP, which we find Mr. Sagil Kapoor, who brings Netra and who really does every year, every month, the first week, does a conversation with the investors and distributors. The kind of the data to really why we should look into what to do, what not to do. The data with which they talk. Really, it's really, we appreciate, we gain a lot, and that is what we do by carrying that, understanding and learning to our all the investors we do. And so interesting, the fund house. And to introduce Mr. Mohit Rajput, and before I introducing, I request all our investors, whoever you have any doubt, we can put in the chat box, and so that we can read out, and Mohit can answer and can give the clarification on your queries. And we can also do that if we are missing out to cover up before 12 o'clock, because we respect your time and the speaker time. So 12 o'clock we shortly end up with whatever unanswered things. So we can separately, we can do the email, we can do that. This is the 29th financial Emperor program, Mohit. We are doing since 29 months, and it is almost beyond the 2.5 years, and we do since 30 years. Our tagline itself is empowering and enabling growth over the 30 years period. This virtual meet is been asked by a lot of investors. They cannot come to the office, they cannot come to the venue. So that's what on their suggestion, we started virtual meet 29 months. It is the 29th program, Mohit, you are doing. Also, I want to tell our investors who are here, we are doing, we got bigger Vidyalaya, wherein 30 to 35 seating capability is there. 30 people comfortably they can sit. We can have the physical meeting, followed by we can have the small IT. Coming week on 16th, we are doing Invest for Progress, exclusive women's program by the women speaker, and we'll also be there morning 11 to 12 o'clock at Paradise at Jadi Arcade, Paradise Circle in ECS Vidyalaya. In 30-seater to 30 people we can accommodate, 30 to 35 people we can accommodate. Any one of you want to send, and women need to know, and together they can make your financial freedom for the family. They can do wonderful things. So please note down, we can spread, and we can take 30 to 40 registration. You can do that. Coming to Mohit Rajput, and Mr. Mohit Rajput is currently leading sales and business development at DSP IFSC, International Financial Service Center, where he is responsible for driving product vision, expanding market reach, and strengthening relationships with key partners and clients. He holds a bachelor's degree in engineering along with a post-baccalaureate diploma in business administration. His core strengths lies in sales strategy, client relationship management, and identify growth opportunities in dynamic markets. Prior to joining DSP IFSC, Mohit worked with one of the Canada's leading banks in the business banking segment, where he gained valuable international experience in client advisory and financial solutions. He also brings prior experience in financial planning and investment, adding depth to his overall expertise. So not only is available today for your 1 hour up to 12 o'clock, but also he can be reached out. You can tell us you want any one-to-one talk, you want some clarity for your NRI family members, your son, daughters, kith and kin. He is always available. He is very kind enough today, even though Saturday is a non-working day for them. For us, they are coming and doing this. And thank you, Imtiaz. Whenever we requested Rishi also locally in Hyderabad, immediately you come forward, help us. Now over to Mohit Rajput, please you can.
Thank you, sir. Thanks for the kind words. Good morning, everyone. Thanks for taking some time today to join this call, and glad to be a part of this wonderful audience. So without further ado, I will take the call today in two parts. Sorry, I am a little bit under the weather today, so please bear with me. So the first part, I will cover, what we do out of Gift City, what are the offerings that we have, the taxation part, the benefits, why an NRI should actually start looking towards India and the Gift City route for their investment, financial planning, and their future. And in the second part, we'll talk about how the investments can be done, and then we can take some questions at the end. So I will talk briefly about what Gift City is, why we had to set up an entity in Gift City, why the Indian government is so much positive about this type of institutions, especially when we already have international financial centers at DIFC, and Mauritius, Singapore, and Cayman Islands are considered tax havens. We as an Indian entity wanted to bring something similar, and that is what the Indian government has enabled through the Gift City route. So we all know DSP Group. We have been around for over 160 years. We have been pioneers in the Indian financial markets. So, one of the founding members into the BSE, and Mr. Hemendra Kothari, who is who used to lead one of the India's oldest financial services firms. So we've been around for some time now, and we wanted to bring something similar for our NRI audience as well. That is why DSP enabled this route through Gift City. Coming to the IFSC part first. So what usually used to happen, especially for NRI investors, is they were quite enticed by the opportunities in other international financial centers or tax havens like Mauritius or Cayman Islands or Dubai. But the issue, or a smaller issue with that, was that the Indian government did not have much control. Apart from that, the confidence piece was not there, because if something is outside India, it's kind of hard to trust, especially for our NRI investors as well as Indian investors. So that's what the Gift City route enables. So Gift City is considered to be the India's gateway to world financial market. It is an SEZ, which is a special economic zone, which gives certain privileges, like there is no taxation, there is no stamp duty, and there is other advantages, especially for an NRI or a non-resident investor. It is also a free trade zone, so there is no GST on the services provided to and from Gift City, which is also very beneficial, especially not just for investors but also for our dear partners. The major currency of investment in Gift City is USD. Apart from that, we also have 6 more currencies which are enabled for investment. And lastly, the regulator. So we are not governed by SEBI, we are governed by IFSCA, which is International Financial Services Centers Authority. So that is the regulator in IFSC Gift City, Gandhinagar. The journey has been quite wonderful. Like the idea sprung up in 2015. That's when the government decided that India should have its own IFSC, and then the regulations began, the tax reforms happened, or the entire thing happened until 2018, and that's when the operational guidelines were set up by SEBI. 2019 was the establishment of IFSC, which is the unified regulator in the jurisdiction. And since 2020 until 2022, the fund management regulations, what to do, how to do, were all set up. And in 2021, the regulations were issued. So 2021 was the time when all the fund houses gathered together and started opening their shop. And in 2025 is when the actual investment started to happen. So we have been around for over 2 years now, and doing investment. Now coming to the fund categories in Gift City. So unlike the domestic market, the fund are identified in a little bit different way, because the target audience here is the non-resident investors. So the funds are designed accordingly. So in overall, there are two type of fund structures. There is non-retail, which is AIF or alternate investment funds. So these are for more sophisticated NRI investors who want to invest into schemes that give a better return with a higher risk as well. The benefits to these are there are no tax in the hands of investors. So these AIF schemes or non-retail schemes, where the minimum investment is $150,000, the best benefit that these offer is that there is no tax in the hands of investors. So as an NRI, if you are investing into the domestic Indian market to get advantage of the growth that India offers, you will most likely end up paying some sort of TDS upon redemption. However, if the same investment is done through the Gift City route, you are investing into the exact same fund, but you get advantage of that tax. So whatever gains are incurred, they are not taxed in the hands of investor. And also there are retail funds that are now coming up. So we do understand that $150,000 is generally a bigger amount. So we also have retail fund for investors who want to start investing with a lower capital. So these are just some numbers on what is the minimum investment, what are the maximum investment in the funds. So these are generally dependent on the type of fund that the entity want to issue. So these numbers are generally fixed by the AMC itself, so these are not the same across all fund houses. And I'll just clearly take you to the fund categories, which are based on the type of investors. So catering to our audience today, we at DSP are only one of the few fund houses that offer both the product, an inbound fund or an outbound fund. So generally, sorry, inbound fund is a fund that accepts money only from our non-resident investors. So the NRI who want to invest into the Indian market. So in the last decade or so, we have seen exceptional growth in the Indian market. So all our NRI and even foreign nationals are quite enticed towards the Indian market. So this is where they would invest. So the NR or the non-resident investors would invest into the Indian market via the gift city route. We categorize this as an inbound fund. Coming to our Indian audience, coming to our resident Indian investors who also want to invest globally. We all know the importance of global investing, especially in times like now when we have seen what an impact even geopolitical events can happen to the Indian market. We as an Indian investor want to be a part of the global investing journey, especially to take advantage of the growth that lies outside India as well. We have been a sound, exceptional, phenomenal market, but we want to take advantage of the growth that lies outside India as well. So that is what we are enabling through our outbound funds. Outbound funds are simply those funds where an Indian investor will invest outside India into global equities, global security. So these are the categorization of the funds based on the type of investors that are offered from Gift City. Coming to the outbound fund, I'll cover that first. Considering the audience that we have today, I'll take the outbound fund first. So again, repeating, outbound fund is simply a fund which is investing outside India, where the target audience or the investing audience will most likely be resident Indian investors. Apart from that, we can also accept non-resident investors into that fund. Now, the fund that we offer, and I'm I'm really proud to say this when I bring this up, that we are the only fund houses pan India or even in Gift City that is offering a similar product. Like in Gift City, there is no one else doing what we are doing, and even pan India, there are almost no product that can match what we are offering. So the scheme name that we have is the DSP Global Equity Fund. As the name suggests, global. So 100% investing happens outside India directly into equity stock. As the name suggests, we are not taking any exposure within India through this fund. Secondly, this is an open-ended retail fund. Open-ended tells us that redemptions, purchase, additional purchase can happen on any business day. There is no restrictions to that. Just like how you do a transaction in your mutual fund account in your day-to-day life, very similarly, you will be doing a purchase and redemptions into this product as well, because it is an open-ended scheme. Being a retail fund, it offers the opportunity for an Indian investor to start investing with a reasonable capital, with a reasonable investment amount of $5,000 to start with. Because a similar product like this, if you start investing, mostly you would not get this from India. If you do end up getting this through a PMS structure or any other complex structure, the minimum capital commitment or the investment amount is on the higher end. So we allow our investors to start with minimum $5,000, and on top of that, if additional contributions have to be made, they would be available with the minimum investment at $500 and above. So there is no multiples. $5,000 and above, you can start your investing with us. $500 and above, you can start your additional purchases. There is no login periods on the fund. There is liquidity option, so the investors can redeem on any business day. However, for the sake of taxation, there is an exit load. So if you redeem early within less than 24 months, there is a 1% charge on the redemption, so your daily investment proceeds. So apart from that, there is no additional charge, there is no expense that we take on top of the total expense ratio that we are displaying on the screen here, which is 1.75%. There is no performance fee or anything as such. Now, there is one question that usually pops up in an investor said that how can I invest in dollars? My account would most likely be in INR. Although people do have kids abroad, but still an Indian investor would most likely have an account in INR. So the Indian government or the RBI has enabled this scheme called LRS, which is Liberalized Remittance Scheme. This scheme allows you to invest outside India per year per PAN, $250,000. So that's the limit set by the RBI. So any Indian investor who wants to invest into global securities directly or indirectly per year, they are allowed to invest $250,000. So this fund falls under the same purview. So as an Indian investor, without taking any approval, without going through any sort of process or complexity, you can start investing into this product directly from your Indian bank account and be a part of the global investing journey. Another important thing, especially for the audience that we have today, is most and or not most, but at least a few of the audience here, as Chandrasekhar sir mentioned at the beginning of the call, they have kids abroad, or if not, then they are planning to settle abroad. They are looking to travel abroad, or at some point of time even settle abroad. So this is what we are enabling through this fund. So if as an Indian investor you are investing in global securities through your domestic mutual fund route, you invest in INR, you take the redemptions in INR. So the whole advantage of getting the dollar appreciation, on top of that avoiding any extra costs that come with that conversion, the complexity or the process, that is completely eliminated if you start by investing into this product. The benefit, or I like to say it as a USP of this fund, is that we firstly start allow investing at a reasonable ticket size, which is at $5,000. So as an Indian investor, if you have kids abroad, you want to leave your legacy behind for them, you want to set up an estate for them. If you are a parent in their early 30s 40s and planning that someday I want to send my kid abroad to a good US university, want them to have the best education that they can, this is your time to actually start that planning. You can start investing with this reasonable amount of 5,000, do additional top ups as per your convenience. There's no restrictions to that. Also, if you want to just travel abroad, enjoy your life, you have worked hard all your life, now is the time that you want to spend some time with your children that are settled in US, Canada, anywhere else, or you want to simply for medical purposes as well. Like, there are times when people want to get that best or services that are available, sometimes maybe not in India but somewhere else. So you need to have a corpus in USD itself. The dollar gets appreciating every other day, so we want to start that investing with that amount in INR, get converted into dollars. And when the time actually comes, 2 years, 5 years, 10 years down the line, you can take that redemption back in dollar itself. It is very easy to set up a USD account in Gift City. I can assist, I can facilitate that. You can start investing through that account. When the time comes, you can take this redemption back into that particular account. With this fund, very, very similar to a domestic Indian mutual fund, you can appoint your kids abroad as a nominee. So your corpus is already set up in dollars. You're not worried about all those complexities that come with estate planning slash financial planning. And when the time comes for the kids tuition, you want to send that $50,000 to a US university for their education, you already have that corpus in dollars. You're not worried about, like, the rates have gone up, dollar is appreciated, like it's appreciating almost 5% every year on year. So all these things are taken care of for you. And the main advantage that comes is the global diversification. I'll come to that part. That's an added cherry on top. But especially for people like us, we want to set up something for our kids, for ourselves, have that advantage. So this is what we are offering with a reasonable ticket size that almost no one is offering within mainland India. So this is more so on the fund features. I will take off on the taxation part for this. Sorry, before that, I'll just quickly touch upon why this route is also very important. With India, the mutual funds that are governed by SEBI, there is a limit. There is a $7 billion limit, and Chandrasekhar sir can vouch on that although people are looking to invest abroad, they are very, very open, but they are unable to do so because fund houses cannot accept any more money. They have reached that threshold that they are bound to reject those investments or pause on their SIPs. They are unable to take any more money. This is also where we come in. We are not governed by SEBI. We are not bound by that limit. So as and when slowly the gift structure grows, we will still be able to accept money. We will still be able to grow our portfolio and give our investor the advantage of the growth that lies outside India. Now, having said that, I'll come to the taxation part, because when you hear all those good things, the second question that comes to your mind is, what will be the taxation? Tell me, how does it look like for me? Because that's when it starts making sense for an Indian investor. So sorry, regardless of the residence status of the investor, so we have Indian investors in our audience today, we also have a few NRIs in our audience today. So regardless of your tax status, the taxation is completely done at the fund level itself. So the tax rate that I'm displaying you, so the equities, because we are directly purchasing equity stocks, we are not buying any passive feeder or an ETF, or we are not buying any index fund. We are directly buying an equity stock. We're directly buying Amazon. We're directly buying Alphabet from our fund. So these stocks give regular dividends. So these dividends get reinvested, and the tax that the fund pays. So the entire taxation is completely done at the fund level. So the fund itself takes care of this complexity. Because what happens is that when you hold a foreign asset, year on year, you are required to disclose on your ITR under your Schedule FA. We have to, if you are buying an equity stock directly, unless you are a chartered accountant or a tax heavy person, it gets a bit complex. And I'm talking from a retail Indian investor point of view. An engineer who is working in IT may not be that great in terms of taxation. So that's where this fund gives you the benefit that there is no requirement of year over year declaring this on your Schedule FA, or paying tax on it. The taxation is completely done at the fund level itself. The holding period of this product, as I mentioned earlier in the call, is has to be a timeline of at least 3 to 5 years, because that's where most of our gold translates to. This isn't a short-term investment having 100% equity exposure. I would highly not recommend for anyone that is looking to invest for at least less than 2 years. The reason being, short-term capital gains are also on a higher end, and this taxation is already set up by the Income Tax Authority of India. So as much as we want to diminish this, we don't have much control over it. We have written to the FM, we have written to the income tax authorities to kindly look into this. But the things will change. Being gift being a new entity, things will revolutionize, but these will take some time. However, as of now, if there is a holding period of less than 24 months for anyone, they will be subject to around 42.74% gains on the entire short-term capital, and long-term capital gains, which is a holding period of about 24 months, it will be taxed at 14.95%. So the fund pays the entire taxation. To just give you a simple example on how the fund tax pays is, let's say we have an Amazon stock in our portfolio, we hold it for 2 years, 2.5 years, and then we switch to the position. Whatever gains have been incurred, only on those gains the fund pays the tax. That tax which is being paid gets reflected on our NAV. So if anyone has visited a website or read a bit about of product, we have two NAVs that we disclose. There is a purchase NAV, which is like a pre-tax NAV, and there is a post-tax or a redemption NAV. So whatever taxes are being paid, they are translated into the post-tax NAV. The benefit of that is that we are aware, we are convicted that we will not be doing any short-term churn, or we are not going to pay any short-term tax. We don't want the investor to also pay that, is which is why we have also clearly told that do not invest for less than a period of 2 years. Also, there is an exit load of 1% to refrain investors from doing short-term redemptions. And so that actually, if you have a holding period of about 2.5 years, you can actually see the gain that the taxes being paid are only at the long-term rate, and you can see some good returns through this fund, which is what the actual goal at the end of the day for everyone is. So that's how the taxation is being done for a resident Indian investor or a non-resident Indian investor, so that they are not taxed in their hands and they don't have to worry about the complexities of Schedule FA declaration or anything as such. Another important part is that Indian investors can invest into this fund. NRIs from most countries can invest into this fund. Also, non-individual entities, which are our corporates, our partnership firms, as well as our LLPs, private limited companies, these can also invest into this fund. They can invest via the OPI route, which is the overseas portfolio investment route. So if anybody of you own a business and you are dealing with some sort of an export or import, you'd be highly aware that with the rising cost of dollar, you end up paying extra than what you're supposed to pay. So if you invest via your company into this route, and when you actually need to do that invoicing, if you have some dollars that you already have invested and you can spare and pay, it also gives you an added advantage to that. So Indian investors as well as non-individual entities can also invest into this fund. Taxation is completely the same, minimum investment size is the same, additional top up is the same, document requirements are quite simple, very very similar to what you would have when you invest into an Indian mutual fund. So without any complexities, you can also be a part of the global investing journey with this fund. I'll just take 5 more minutes, 10 more minutes into this fund. So I mean, I've already spoken too much about why invest globally, the diversification that lies with the Indian market, and why investing into this fund that gives you an added advantage. Planning for USD goals, as I mentioned, yes, to beat the inflation that dollar has, you can avoid by doing investing into this fund, and opportunity to own global businesses. So we all, even the platform that we are on today, even Chandrasekhan sir, the cap is wearing Nike global brand. So all of us are using global products. So why not be a part of that journey where the if the company is growing, we also get a share of it. So this slide just simply tells us the market cap India holds globally. So although we are a sound market, although now we are the fourth largest economy, we are still around 5% of global market cap in terms of the equity market. So this translates to one simple thing, that 95% of the opportunities are still outside India. Now is the time to look into those. This just simply tells us the diversification benefit. So the slide over here, the first column, India versus US, I just want to look at the one number, 0.59. So that's a correlation factor that says that so in simple words, it tells us that 59% of the time India would work in a similar manner as the US market, but 41% of the time it would be different. So if somebody that already has a significant exposure in Indian market, and in the times when the Indian market isn't doing that great, the global investing will keep their portfolio really balanced. Again, helping plan USD goals. Cost of education has risen over the years. If you already have investments in dollars, you need not worry about your kid who is probably going to graduate or go to a foreign university in the next few years. It will give you that added advantage as well. Now, this is simply just one chart that I would like to really focus upon. So since 2016 to 2026, in the last 10 calendar years, India has been the best performing equity market only once among the last 10 among the major economies. And the reason we have given a comparison for these countries only is because these are the countries where we are actually investing. So when we gather these data, it translates into one simple thing, that we want to take advantage of the opportunities that these countries offer outside India. So we are investing heavily in US, Canada, China, South Korea, Japan, as well as in other major economies like Taiwan and Europe. So these are our focus countries as well. I'll just show this to you in a minute. Fund structure is quite simple. Indian investor and also primarily retail Indian investors, also NRIs can directly invest into this product, which will be investing directly into the equity markets. So there is no intermediary, there is no feeder fund or a passive structure in between. Fund strategy very simple. I'm not going to complicate it too much. The fund strategy is quite simple. So we buy stocks, we hold it for the growth. The key markets where we will be investing are USA, Canada, Europe, Hong Kong, Taiwan, Japan, South Korea, and China as well. In China, I would just like to clarify, we are not dealing with the Chinese currency or the regulator. We are buying the stocks that are listed on the Hong Kong exchange or the US exchange, those Chinese companies only. So these are the key markets. The stock that we are picking, we're not picking any small cap or any emerging market stock that is just come out of anywhere. We are buying stocks that have a good market cap, that have a reasonable market cap, at least 15 to 20 billion dollars, predominantly about 30 billion dollars. So those are your large cap blue chip stock, because that's where we can see the returns. That's where we can be assured that in times, especially when times when market isn't doing that great, we are not going to take a bigger hit. Because while most of the people talk about the good returns, the good times, we all know that there are times when the market isn't doing that great. So we also need to be aware on the downside risk, which is what is being protected by investing into these type of companies. We are not focusing sorry, we are not focusing on any particular index, we are not focusing on any particular country. We are a simply long only equity strategy. So the whole philosophy is, we buy stocks that have 30 to 40% discounting in their valuation. We hold them when the company reaches to a certain growth, and we take advantage of the growth that lies with it. So there is no complex strategy. We're not doing any hedging. We're not taking any bets or any long shot on this product. It's a very simple strategy. Wherever there is discounting available in the company's valuation, because although Indian market, I still feel today is a bit overvalued, global companies, good companies are still undervalued. That's what we want to take part of. We want to take advantage of those companies' growth so that our investors can also be a part of that. So this is our investment philosophy. We focus on a long-term horizon. We define risk as the potential for permanent capital loss. So we are not trying to buy any company that is built on an AI narrative or any tech narrative. We're not doing anything that is not good for our investors. Especially, we understand that market forces can always defy even the most thorough research. So we want to look at the past returns while focusing on the future, and we completely stay away from narratives. We are not, there's an AI boom going on. We completely understand that we have got Taiwan Semiconductor, we've got Alphabet, we've got Meta in our stock, but we are not going to buy any upcoming firm that we have heard that they have done exceptionally well in the past couple years. They are going to go 100x from here. We are not going to take that bet, if I were to call it simply. And lastly, we look at fair value assessment of the company has nothing to do with the stock market cycle. So this is what we are very clearly sure of, and that's how we have purchased our stocks as well. In terms of focus areas, what we look at is what is not going to change in the next 10 years. It's very hard to predict what's going to happen in the next 10 years. It's even difficult to predict that what's not going to change in the next 10 years. So that's where our research comes in. That's where our team of analysts, that's where our team of equity research people come in. While designing the portfolio, even the people usually, they read some reports. There are some articles available on Bloomberg again as such. But what we have done is we are not reading those research. We are not simply taking those decisions based on that. I'll show you the people that have actually designed this portfolio, Mr. Natraj and Mr. Jayesh. So these guys have visited these countries, these businesses in person at least twice in the last 1.5 years. So the idea came across to design this fund sometime in 2024, and we launched this fund in 2025 September. So almost 1.5 year has gone just to design the portfolio, just to select those 30 stocks that we are convicted of, that we are not going to sell in the short term. We are not going to have any additional tax. We will be able to hold it for as long as possible to get a better return. So that's how the research has taken place. That's how the portfolio has designed. I will give you a portfolio snapshot. So the entire journey is available on our website. The entire portfolio is also available on our website. But this will just simply give you the top 10 holdings, will simply answer most of the questions that we have in mind, that where we are investing. So we can simply see Amazon.com, pioneers in the retail industry, pioneers in the e-commerce business. Adyen, they are one of the largest company globally, which is like a payment service provider, something similar to what a Razorpay does in India. Adyen does it globally. Taiwan Semiconductor manufacturing company, Meta. We all are aware about Facebook and WhatsApp, Tencent, Alphabet, Google, Nexon, Strip.com. So most of these names, anyone that is doing investing in these days and times, are aware that what these firms are doing, why they are important, and why somebody should invest into these. So almost 44% of our portfolio is invested into these companies. And we are also very sure that we will be adding some more stocks into the portfolio. I'll also just show you the allocation sectorally and geographically. So as of now, North America, which is US and Canada, we've got around 29% allocation. We've got China 16%. We've got Europe 15%. We've got Taiwan, UK, Singapore, Japan, and we will very soon be adding South Korea. We will be adding Indonesia and Brazil. We have spotted good opportunities over there as well. So as of now, we have 27 stocks in the portfolio. We think that at a good point of time we'll be having somewhere around 30 to 35 stocks in the portfolio, keeping it simple, not overcomplicating it, and taking positions into those countries where the actual growth lies. Now, when I actually say global, this sectoral allocation as well as geographical allocation also answers that we are not just focusing on US, we are not just focusing on China. We are trying to keep it as global as possible. We are trying to take positions into emerging markets as well, where there are good opportunities with better valuations available. So that is more so on this fund. I'll take a pause, Chandrasekhar sir. I hope I've covered most of it, and then I'll just leave some room for questions or anything else you want us to go over.
Great, Mohit. Really, very nicely presented, and how really invested, how the investors who like to send kids abroad, they can really put outbound so that dollar denomination without disturbing taken care of, and they can really whenever they want they can take and use that for their higher studies, and how we can have the global exposure. You can't be only Nifty 50, or you need to go to S&P 500, you have to go to China MSCI. It's really, you really covered well. And I want to know, maybe few minutes, 3 to 5 minutes for the NRI inbound. Okay, you may have, you may not have, maybe it takes time. NRI inbound. So what that for outbound you given what are the advantages, how it's been done. For the inbound NRIs, there are Gulf, NRI investors here, US NRI investor here. So for example, for US NRI, we may say at the taxation point of view, it can be easy for them because you present or you give in a way they can easily give it to their tax filers, etc. But for the Gulf people, so inbound for the NRIs, what really in addition to the exposure to the India growth, what are the other advantage for the inbound NRI who are putting through the inbound to the India? Please.
Absolutely, sir. So, as I've covered the outbound, that is for our resident Indian investors, I'll also take a couple minutes for the inbound strategy. So, inbound basically means an NRI that is investing into the Indian market. So, this particular slide is more focused on the US NRIs because that's where the most complexity lies. For somebody that is coming out of Gulf, they have this beautiful advantage of paying no tax. So there are not many complexities for their end. They can always easily invest into the inbound fund, easily take redemptions. They are in a really good place to start their investing journey. I will cover briefly on the US NRI investors that want to actually invest India because they face the most challenges. The SEC regulations are quite strict in US, which is why they are unable to invest. So what we have done as DSP is we have registered a fund itself in US because SEC regulations clearly define that if any US investor want to invest into a fund, either that fund has to be registered in India or the fund has to be distributed through a registered broker dealer in the US. So we have done both. We have registered our fund and we have partnered with a broker dealer in the US so that our US NRIs can take advantage of the growth with the Indian equity market. Sorry. So the name of the fund is Vested India Equity Opportunities Fund. It is domiciled in USA itself because most of the US investors or even NRI investors, the complexities that they face are the documentation. I'll just briefly tell you that what happens is when the documents like a proof of ID or a proof of address has to be submitted for an NRI, the regulations which are set up by the regulator, IFSCA or IFSCA, they tell us that the documents have to be attested by the authorities in that particular country. So it could be a notary, it could be a judge, it could be an accountant, it could be a banker. So overall, the complexities increase and the cost as well, which is what we are avoiding by directly registering the fund in US. So you will be investing into a USA domiciled fund. All you will need is probably your social security number or your driver's license passport copy, which can be evaluated digitally. There is no cost. You don't have to go to a notary to get this documentation done, get those attestations done, or physically sending us all the documents. You can directly invest into Indian market via the fund domiciled in USA itself. It's a Delaware registered US private fund. As long as you are an accredited investor, which I will show in the next slide what an accredited investor means, you can start investing with $50,000 minimum. Usually, if you were to invest directly into a gift city fund as an NRI, you would be required to pay $150,000 minimum. Over here, we have that option of investing with minimum $50,000. This fund will invest into the India Equity Opportunities Fund, which is in Gift City, and this Equity Opportunities Fund will simply invest into the DSP Large and Mid Cap Fund. So the DSP Large and Mid Cap Fund has been in the market for over 25 years now. One of the flagship products of DSP, which has given amazing returns in the past few years. So a simple structure where a US NRI would invest into Gift City would simply put the fund into the US Indian market. The main advantage is that when you take redemptions into this fund, you are not going to pay any tax in India, regardless of your capital gains status or regardless of your income status or your residency. You will not pay any tax in India. There is no TDS deductions in India. Only when you take this money back to US, there would be some sort of taxation that you are supposed to pay. Now, in order to clarify and sort that out, what we are doing is we will be giving you the K1 certificate as well. Because whenever you talk to an US based investor, they are more worried about the structure. So we have set up the structure as a PFIC, which is a passive foreign investment company. We will also be giving K1 statements every year to those investors. So they don't have to spend a single cent on extra to give to their accountant to generate that K1 certificate, file all those taxes, and have an additional layer of cost to that. So for the sake of investor, we will support you with your documentation, with your tax part, and another important point is the accreditation. So in order to invest into this fund, and this is as per the SEC, which is the US regulators guidelines, accreditation is quite simple as well. Either of one of these conditions have to be satisfied. So you need to have a net worth of $1 million and above, or your annual income has to be above $200,000, or $300,000 joint for a couple in the last 2 years, or you should be holding a financial professional license with series 765 or 82. So for especially for our US NRI diaspora, we have done great. So I'm not worried at all that most of our audience today would not be fitting into this criteria. So, and as long as you are having these any of these, we will be assisting you for doing that accreditation. You don't have to spend a single dollar on getting your documents attested, or get that C attestation or anything as such. Accreditation can be done by us. Your KYC will be done completely digitally through our US based entity. On top of that, we will assist you with your investments, fund transfer, documentation, tax filing, regulatory filings or approvals if needed. And at the end of the day, you'd get advantage of the opportunity that lies within India. The Indian market has done phenomenally well. We are very optimistic for the next few years that will lie ahead of us. Our honorable PM has told us by 2047 we want to be a global powerhouse. I myself am optimistic about that. I've seen GIFT grow. I've seen like I'm from Ahmedabad, so I've seen Gujarat grow. I've seen the opportunities, the wonders that we can do. So I'm pretty sure that if somebody is part of this journey, they will be in a really good place in the next couple of decades. So that is on the fund part. And again, because it's an AIF structure, I'm not able to share too much details on this, but I'm very happy to connect if somebody is interested over a one-to-one call or a meeting. I'm more than happy to give more details for any NRI. So this is just the part that I covered today was morely US focused. But if we have our people from the Gulf, Dubai, UAE, we have a similar product for you with a better opportunity. So please feel free to connect. Please let me know. I'm more than happy to discuss this and take it further.
Excellent, excellent, Mohit. Good. So I request, in one of the participant hand or team end, if you have the query, kindly chat or you can unmute and you can ask. By 11:58, I'll summarize and then we'll close by 12. Open to Q. Yeah, maybe one of the Gulf client, Mohit, good. So as per the US based NRIs, I understand because the tax part and really it's becoming tougher and tougher from the US government. A lot of my NRI based out of US, they were not coming
Yes.
forward to invest in the mutual fund. Where 3-4 years back we used to get just like that, but last 2-3 years, and maybe because they need to disclose, they have to give the K1 K1 statement. So a lot of things which they are not want to get into the nitty gritty of the problem with the US government. So they don't want ultimately the question. So good. So you told for them you have this the inbound which either $1.5 lakh or $50,000, so that no need to pay any taxes here, and everything you give a K1 statement. So very simplified, so they can come without any the problem, without any fear. For the Gulf country investors, and they have the NRI route and they have the inbound route wherein $1.5 lakh. So what you want to say to the Gulf client? So when I'm having directly, I can put in the mutual fund as a NRI investor. What really I'm going to by putting through the inbound gift city product. So what am I going to benefit? Yes, one of the Gulf client. Mohit,
Sorry,
are you
sir.
there?
So
Yeah,
yeah. Sorry. So the main advantage that a Gulf client will get is that, see, they are not subject to any tax in their home country.
correct.
They don't have that long term or a short term capital gains as such. But when they were investing into the domestic Indian market, there's certainly a TDS portion that
Oh,
whenever they
withholding.
redeem, there is a withholding tax, which is completely eliminated via the gift city route. So if they are investing with the gift city AIF, where the minimum ticket size is $1,50,000, but if they invest, and when they take the redemption back after a certain period of time, there is no taxation in India. It is a completely pass-through structure. So whatever gains happen, they can take that back into their home country. And if there is no taxation in their home country, it's a cherry on top of the cake. So that is a really good advantage for Gulf countries, or all those Middle East countries.
Yeah. Any other anything on the chat box? Kant, anything on the chat box?
Nothing, sir. Okay.
Any one of you would like to Mohit with an exercise? Yes, please. Someone want? Oh, I not know what I look to being we are dealing with the resident investors to the NRI investors across the US and Gulf and Europe countries or even Australia. Two part. One is as a Indian investor. The part one which he told by putting into the outbound the $5,000, even if you take approximately 90 rupees means 4.5 lakh rupees. You can get exposure to the good mutual fund like a DSP into various countries. The growth generally say in our industry when we do the program for ultra HNIs and HNIs coming 10 years or 15 years or 20 years, you need to allocate your money 35% is a one third money to Nifty 50 in India and one third into the S&P 500 in the US market or latent market and the one third into China MSCI. The China is the US is a developed country and China is really growing and to catch up and India nowhere we are behind, so which we are growing in a great way. So if really any investor, the same way for them when the Indian investor in addition to okay good we may have the home bias and which we want our country to grow, we have our patriotism, our things and all, maybe 50-60%, even if we invest because we know the thing is better than unknown. So remaining, we must get exposure into the US market and the China market. So this, the gift city route for the outbound, it really helps. Yes, it helps. National Stock Exchange is going to NSE International Exchange. They are going to launch. Through that, you can open the account. You can buy the stock directly. Okay, that is one more route which you have. And and then through the mutual fund, you can have the global funds which you can invest. As Mohit said, $7 billion is a maximum which they can accept. Majority of the mutual fund is been really they reached that level when 2 or 3 customers clients asked the last week we could not accept few funds. We don't have funds to offer for them because they are not accepting because the threshold limit which they've been allowed $7 billion they already reached. So being the mutual fund route global funds you cannot reach out except if you find yes 4.5 lakh rupee maybe year through the global fund of the mutual fund. Even if you can put any amount, maybe smaller amount, 10,000 or 1 lakh, 2 lakh, 5 lakh, anything. But through the gift city, you need to invest around 4.5 to 5 lakh rupee. You need to invest. But here the advantage is dollar. As I said, no arbitrage loss is there. You are investing the dollar today, and what are the dollar like? Maybe after 5 years, after 10 years, that dollar, whatever it appreciated, even that is going to be catched over here. So Indian investors for the futurist, the kids, studies, or you want to go to foreign international trip. For this, you can accumulate. 1, 2, to expose yourself to the returns generated by the developed country or fast moving like China, and to get exposure. So this can be for the investors whose the children are in the US and other places. So they are not coming forward to invest in India because of the taxation and very stringent and very tough regulations in the US. We experienced that 4-5 years just like that. Any NRI calls up, we open, we do that. Today NRIs, because once they invest, they need to show to them and how to show and what to do. So they don't want to take unnecessary complications and risks. They're not coming forward. So here this inbound the gift city product is a very very comfortable, very very easier, and so which they can take exposure. For them 1.5 lakh dollars should not be a problem. So a majority percent of the NRI investor. So these two things, the people the over investors here carry through the team Mohit to the various investors who are not they could not. For example, US NRIs could not participate because the timing is completely their timing and our timing is they requested us to record and send across, which I'll do that this recording, and remaining people they joined, but for various works they would have missed out. So we'll ensure through the team and myself and through these recordings we'll take over, and really we're very happy. Mohit, Imtiaz has done a physical meeting for my team for 25 people, and you have done for our client today and for my team. we will ensure, we'll take it. We have around 1,000 NRIs exposed. We are having the connect. So we'll take this product and these details to 1,000 NRIs, and through them, and they can connect with their friends and relatives. And ultimately, our purpose of making India to be used for how for Indians, we need to take exposure to the US, S&P 500 or China. For them also, they need to take India's exposure. So both the ways, we need to have the global exposure. This Gifty City simplifies, will do that. So with that, Mohit, thank you very much. Even though you are little uncomfortable, you are coughing, so please take care of and take rest and take out water. And thank you, Imtiaz.
Thank you, sir. Thank you.
Thank you. And thank you all the investors and all the teammates. We'll carry and we'll make inbound and outbound to succeed. We'll be. Thank you very much, all of you. Thank you. Thank you.